Hello everyone. Today we'll analyze the American stock market, specifically the S&P 500 index as the main indicator of the US and global economy. Look at the chart! I want to point out that we'll be looking at everything on the QuantFury platform. I chose it for my own trading. I recommend it because you pay zero commissions and can trade any financial instruments, from crypto to the stock market, forex, commodities, and also indices and ETF funds. In this case, we'll look at an ETF tied to the S&P 500 index because it has a long chart, no expiration dates, meaning no end of trading, and you just multiply this ETF share price by 10 to get the S&P 500 index value. Well, roughly, there might be a slight difference. So if we're talking about the current S&P 500 index value, it's likely very close to 6,542 points. I just multiplied the share price by 10. These are weekly candles, and we've looked at this chart many times. I showed here that each yellow rectangle is a divergence, and each divergence was followed by a fairly deep correction, 15% here, 20% here, 26% here. And just recently we looked at the state of the S&P 500 back then, like a couple of weeks ago, and there was a 4% drop. I was saying from the peak, from the all-time high. I was saying that it's very little. Now we're already seeing 9.8%, but that's also very little. Why? Because, well, you know yourself what the situation is in the world right now. Yes, it started in Iran thanks to Donald Trump, but it's spreading across the planet. Fuel and energy prices are rising, and subsequently fertilizers, food, logistics, and absolutely all goods will or already have become more expensive. And this is a situation that has never happened before. And this never resulted in only a 10% decline. That's not serious. But let's move away from what Trump says or said, or what ultimatums he gave to whom, and just look at the chart. My expectation is a move to the lower boundary of the channel, at least, which is around 4,300 to 4,500 index points. But what do we see right now? We saw a divergence. Here it was marked for us. This divergence went exactly where I expected. It moved toward the 50-week average, and quite predictably it stopped right here. But was there a reversal here? No, there was no reversal here. Why? Because this week of decline from March 23rd was not engulfed by the week of growth from March 30th. Accordingly, we can't even talk about any kind of local reversal, although it is certainly possible. The other question here is where to look for a short entry point or when to buy. Well, in my opinion, it's absolutely not worth buying right now. A short entry point given last week's green close is also quite debatable. And we won't get any useful information here other than that there might be some kind of bounce, another attempt to move up. I don't even rule out a new all-time high, but ultimately we will go significantly lower. And not to the 100 week like it was here in 2025, but somewhere towards the 200-300 week or the lower channel boundary, as I said, around 4,500 points. But now let's remove all the markings because the weekly candles aren't very informative in this case. We can only say that as soon as we engulf this green week of growth with a red week of decline, we'll likely see a drop to the 100-week average. That's around 6,000 to 6,100 points, and potentially the 200-week. Again, a lot will depend on who said what and who is bombing whom. Yes, I'm being quite cynical, but my job right now is to talk about the market, not about human values or who's right or wrong. Although I do have an opinion, of course. So now let's take a look at the monthly candles. The month of March, which closed with a large red candle, tells us that, first of all, we've engulfed many months of this creeping growth. This is a definite downward reversal. Secondly, it's very likely we'll see a new March low in the area of 6,300 points or less, meaning we'll go below that value. Thirdly, we'll likely reach the 50-month average, which is currently around 5,200 points. I'm multiplying by 10 right away to make it easier for you to navigate if you're trading the index itself. Well, you can see the stock price on the screen. And finally, the RSI has also indicated a downward direction. It's not at all forbidden in April, since the month just started, to go, for example, to the middle of the March candle's body. That's 6,650 points. It's not at all forbidden to even go to its base. That's 6,800 points. But potentially these will be very good short entry points if you're working with short positions. That's it, nothing more to add here, except perhaps that the technical target is the base of the August candle, which is 6,250 points. We haven't reached that yet. Well, basically the chart strongly suggests a move into this area where we had another reversal with such a large drop. That was in December 2024, and that's around the 6,000 point mark. But I emphasize the 50-month, and even the 300-week, and even the lower boundary of this channel, around 4,500 points. These are all very, very likely levels where the index will go, in my view, with a very high probability. But it's absolutely certain that you shouldn't buy anything here given this March close, which engulfed 1, 2, 3, 4 months of this kind of creeping, slow, but nonetheless growth. Yes, not every month saw new highs being reached, but nevertheless it was growth. And this growth, all of this growth was engulfed by a single candle. This points to a potential move much lower. Now let's look at the daily candles. With that, we'll conclude our review. I'll just remind you once more that we're doing this on the Quant Fury platform. Here's the logo on my t-shirt. 0 commissions and thousands of financial instruments that you can trade both short and long. On the daily candles, take note, and this is a telling signal, we closed below, or rather not just closed but held below all moving averages, below the green 50-day, the red 100-day, and below the orange 200-day. And the growth we're seeing now is nothing more than a technical correction toward the 200-day average, the nearest of the broken moving averages. Accordingly, at the moment, the priority remains downward, especially if today, April 7th, we close by engulfing the growth candle from April 6th. And then again, the global situation around Iran, in the Persian Gulf, in the Strait of Hormuz, it doesn't promise anything good for the global economy, whether locally, midterm, or in the very long run. Subscribe to the channel if you find this kind of content useful. The next review will likely be about Bitcoin. Until next time, goodbye.